Good morning and welcome. This is NDTV Profit. My name is Alex Mathew and you're watching All You Need to Know. Over the course of the next half an hour or so, we'll tell you everything that you need to know so that you can start your day on the right note. Let's start with the headlines. Banking stocks witness a fresh wave of selling that drags the rest of the market down. HDFC Bank hits a 52-week low. Axis Bank reports over 9% rise in core income, but expenses eat into profits. Zee Entertainment loses a third of its value as institutions dump the stock after the merger talks collapse. US equities continue to rise. The S&P 500 notches its third straight record close, while the Nasdaq 100 climbs 0.4%. The Dow, on the other hand, falls 0.25%. The early rises in the Asia-Pacific region trade under pressure despite better-than-expected export data from Japan and expansion in Australia's manufacturing activity. Now, US equities are defying gravity seemingly, with the S&P 500 rising to a fresh all-time high for a third session in a row. Tech stocks continue to hold their ground despite resetting of expectations that rate cuts are around the corner. In fact, that is now being pushed forward. In fact, bond yields have continued to rise on the long end of the spectrum, with the 10-year Treasury yield now consolidating comfortably above that 4.1% mark. In fact, it ended at 4.15% overnight. That's normally seen as a not-so-good sign for equity markets. Meanwhile, the yield on the 2-year Treasury has also fallen, which is another indicator that the market now expects rate cuts to come in later than they previously thought. Meanwhile, Donald Trump has emerged victorious in New Hampshire's initial Republican primary, beating contender Nikki Haley. This, according to some, clears the final hurdle for Trump's nomination as the presidential candidate for the Republican Party this year. That's because the outcome of the latest primary is expected to prompt demands from some Republicans for Haley to withdraw from the race. Her campaign team, however, has promised to persevere until early March, when 16 states cast their votes unanimously. Asian markets are under pressure at the start, despite some encouraging data from Japan and Australia. Japan saw better-than-expected export data, while Australia has witnessed its manufacturing activity increase after 11 straight months of contraction. Let's talk about the Indian equity markets then. Cuts of about 1.5% for the benchmark index and sharp cuts for the bank Nifty as well as the broader markets. In fact, you saw selling across the board, and foreign institutions net selling equity in yesterday's session worth over 3,000 crore rupees. They have now sold over 26,000 crore rupees in the month of January, most of that concentrated in just the last 5 trading sessions. What are the latest cues that you can take from the F&O space? Agam is here to tell you just that. Morning, Agam. What direction do we look at?
Alex, it was a tough day of trade for the bulls because we started off with a bang, a lot of green, and eventually not only did we give up those gains, but we, landed up significantly lower. And, we're just further seeing another 1.5% cut as far as the Nifty goes, even as we see unwinding to the tune of 30%. This only means that a lot of your older long positions have been completely taken off. And at the moment, there is a lot of uncertainty, which is, of course, indicated by the India Volatility Index, which also moved up by as much as nearly 8% yesterday. This is as far as the Nifty is concerned. Let's pull up the Bank Nifty. In fact, mind you, that both the Bank Nifty and the Nifty futures, the January ones, have gone into a discount, a significant one too. The Bank Nifty moved and lost as much as 2.3% as well after trending higher in opening session. So the weakness is there for you to see that we didn't see too much in terms of open interest change. To move on and talk about how things panned out as far as the Nifty options go, and this was, of course, on expected lines because naturally, as Nifty came off, we saw a lot more writing around 21,500, 21,400, 21,300. Do note that just 2 sessions ago, all that writing was around the 22,000 mark, which has come off substantially, well over 500 points. And we have no change as far as puts are concerned, and a lot of these puts were unwound as well. Now we are keeping an eye on 21,700 on the higher end, which has the max call OI, and on the lower end, 21,500 for the put max OI has been completely taken out, and it is now the 21,000 back, which is in focus. Let's talk about a handful of other counters and where we have seen a lot of selling coming through. So longs unwinding. This is of course open interest. Okay, so we do see open interest change, but this is a decline. So this is unwinding coming through. So Jindal Steel, Shriram Finance, Godrej Properties, A Small Finance, SBI Cards. Sure, these are large numbers, but we've seen selling across the markets. Alex, I reckon that we may expect some respite, but the question really is, will the remaining traders take that as an opportunity to perhaps go and short at those levels as well? Because we are expecting increased volatility for sure today as well.
Certainly. Thanks so much, Agam, for bringing us those details. Now, the banking pack, as Agam pointed out, has been in focus, and that is led by HDFC Bank, which has declined quite substantially over the course of this week on account of earnings. Axis Bank, as a result of which, was under the scanner with its third quarter numbers. Mimantsa is here to tell you the key numbers to watch out for Axis Bank for the third quarter. Mimantsa, what can you tell us?
Hi, good morning. So Axis Bank reported a nearly 4% year-on-year rise in net profit, which is in line with what analysts were expecting. Sequentially, too, the bottom line was up 3.5%. But the pace in rise in net profit was a little slow this quarter because of the higher operating expenses that the bank has incurred on account of integration with the integration of Citigroup India's consumer business. The acquisition was completed in March 2023. But deposits, however, showed a strong growth of 5% quarter on quarter, considering the extent of liquidity shortage in the banking system. And Axis Bank's deposit growth, which is dominated by rise in term deposits, was among the best in the industry. So that is where the comfort is coming from. But net interest margin fell by 10 basis points to 4.01%, which is what is happening for other banks as well. And probably that's why we are seeing the bank Nifty down in last few days. But analysts are drawing comfort from the fact that it remained above 4% for Axis Bank specifically, even as the cost of deposits fell sequentially. So moderation in NIM will be a key factor to watch out for in the coming quarters, is what analysts are saying. Asset quality also remained broadly stable, with gross non-performing asset ratio falling to 1.58% to 1.73% from the previous quarter. Gross slippages were, however, a little bit on the higher side, 461 crore rupees higher from the previous quarter. Some of the downside risks that the analysts have pointed out are is the extent of margin compression, poor execution of Citi's acquisition, and operating costs. One more thing that I would want to point out here, Alex, is the capital adequacy ratio took a hit of 168 basis points on a sequential basis due to increase in credit risk weight on unsecured lending by the RBI in November. And the provision coverage ratio also fell in the third quarter, as bank had to set aside provisions of around 181 crore rupees against its exposure to AIFs.
Understood. Thanks so much, Mimantsa, for breaking down those numbers for us. By the way, we will be talking about banks and private sector banks in a lot more detail on the editor's cut. To watch out for that over the course of India Market Open. For now, let's turn to earnings from the automotive space, and Bajaj Auto as well as TVS Motor are expected to give out their third quarter numbers today. To tell you about what to expect, we're joined by Vinay Kulbe this morning. Vinay, good morning. What are the key numbers to watch out for with regard to these two automakers?
Morning, Alex. So Bajaj Auto is going to be among the first of the companies in the auto pack to put out its earning today. And the company's profit is likely to rise nearly 29% on higher sales. And sales were higher 22% the quarter to over 12 lakh units. And this is highly driven by two-wheeler sales. And because sales in the three-wheelers pack were a little bit lower compared to the last year, revenue growth is driven by higher share of premium vehicles and price hikes. As we know that over the last year, companies have taken price hikes, and that has been adding to the top line of the companies. Lower share of exports and three-wheelers in overall sales has dented margin a little bit. So you will see the margin coming down to 19.4% from 19.6%. when the company puts out earnings today and talks to analysts or shareholders, the eyes will be on management commentary, on demand scenario, and how long it will take to recover in the export markets. So remember that Bajaj Auto is among the first companies in the auto pack to put out earnings, and whatever we have gathered from the analysts' commentary, the two-wheeler companies are going to outshine passenger vehicle makers and commercial vehicle makers this time around.
Okay, and what can you tell us about TVS Motor?
So TVS also has seen a higher share of sales in the two-wheeler segment. So their profit is also going to surge, likely to surge 55% because of these higher sales. The volume sales have increased 25% year on year, over 11 lakh units in the quarter. There are increased volumes, higher mix of EV scooters, and price hikes that are driving revenue growth for the company. Margins likely to expand due to lower input costs. We know that the lower commodity costs have put down the raw material bill for the companies, and this is going to reflect in the margins for the company.
All right. Thanks so much, Vinay, for breaking down those numbers for us. Indian Oil Corporation is the other one that we're tracking from the Nifty pack, in fact. The numbers for the December quarter are expected to be a little bit weak on account of segment-specific headwinds. Mihika is joining in to tell you about those and the key numbers to watch. Morning, Mihika. What can you tell us?
Morning, Alex. So yes, from a sequential point of view, the earnings are expected to be weak, and this is mainly due to headwinds in both the marketing and refining segment. According to Bloomberg estimates, while revenues is expected to rise by 28% on a quarter-on-quarter basis, EBITDA may fall 35%, and margins expected to contract from 13% last quarter to around 6.6% this quarter, and this will evidently affect their net profit, which might fall around 21%. Now, in H1 FY24, oil marketing companies did see multi-year highs when it came to their refining and marketing margins. However, Jefferies did come out on a note where they said that the gross refining margins are down to the $4.1 to $5.5 per barrel range. And this is mainly on the back of a fall in gasoline, diesel and aviation turbine fuel spreads, where diesel spreads fell 21% quarter-on-quarter in Q3. And the spreads were down even after the Russian export bans were researched. And in terms of the marketing segment, it's mainly due to, first of all, the fall in Brent prices. Brent prices are down around 16% over the course of Q3. And the second is the diesel marketing margins, which went into negative territory around the negative $1.4 per range, which is also expected to, affect the company's earnings.
All right. Thanks so much, Mika. Certainly one to watch out for. We have to slip into a very quick break, but as we get closer to the interim budget, we get you the top corporate voices from across the industry to tell you about what they expect from the government. Here's Ghulam Zia of Knight Frank to talk about the expectations with regard to the real estate space. Take a look.
While there is a list of other recommendations as well, but the focus has got to be on affordable housing. So one more of that is to extend the Pradhan Mantri Awas Yojana tenure. It has already expired, so we were suggesting that it should be extended. And also, once again, related to Pradhan Mantri Awas Yojana, the limits to identify the lowest segment of the strata also has to be broadened, especially in places like Mumbai.
Welcome back. You're watching All You Need to Know. It's time to look at stocks that are likely to be in focus today on the back of corporate announcements as well as on earnings. We've got Anushi first to talk about her list of stocks, and there's Bharti Airtel, Religare Enterprises as well as Rallis India to talk about. Anushi, what can you tell us?
Right. So starting off with Bharti Airtel, that would be in focus after the company has decided to prepay about 8,325 crore towards the Department of Telecom. Now, this was dated to the spectrum it had acquired back in 2015. So that was in the 2015 auctions, it had one spectrum was 29,000 crores. So of that, the company had already paid about 11,374 crores, while upfront amount due was about 7,000 crores. So this is on the Bharti Telecom. Now coming to Religare Enterprises, CCI has approved the 5.27% stake sale of Religare Enterprises to the Berman family, which is going to take place through the open offer between the 4 entities of Berman family. So this also includes an open offer for up to 26% of additional stake for the company, and currently Berman family holds about 21% stake in Religare Enterprises. And lastly, coming to Rallis India, the board has approved the capacity addition of about 2,000 ton per annum in its Dahej SEZ unit plant. So the existing capacity was already about 5,000 ton per annum. So with the new capacity addition, the company expects an investment of about rupees 15 crore and expects this to be completed within FY 2025. So these are the 3 stocks that you should be focusing on.
All right. Thanks so much, Anushi, for bringing us those details. Sticking with stocks in focus on account of news, and there's an update from CCI to talk about, among others. Varsha is joining in to tell you more. Varsha, morning. What are you picking up?
Good morning, Alex. So let's start with AU Small Finance Bank, where it received approval from CCI to merge FinCare Small Finance Bank with itself. Now, merger remains subject to approval from RBI. Also, in October, AU Bank shareholder had granted approval for a merger. An appointed date for amalgamation is almost Feb 1st. If you see the asset size as on September 30, 2023, FinCare Small Finance Bank has an asset size of almost 14,774 crore, while AU Small Finance Bank has an asset size of 95,900 crore. Then we have Lupin, where it receives an approval from US FDA for a drug, which is a generic version of by Janssen Pharmaceuticals. Now, this drug is used to reduce the risk of stroke, and if you see the estimated annual sales around $8,000 million in US, and this product will be manufactured at Lupin's Pithampur facility.
Right. All right, thanks, Varsha, for that. Let's turn to earnings, and Mihika is joining in with the first wrap, and we'll soon have more. But Mihika, what companies are you looking at?
So first I'm looking at Mahanagar Gas. While, the earnings were down, it was a revenue and profit beat versus estimates. Revenues were down marginally by 0.3%. But the main thing was the EBITDA was down 6.3% and the margins contracted at 28.6% versus 30% last quarter. And net profit was also down marginally by 0.63%. But from the volume side of things, the total volumes were up almost 3% at 3.67 million metric square cubic meters per day, and total PNG volumes were up 4.71%, while CNG volumes were up 1.92% on annual basis. And the company also approved an interim dividend of rupees 12, and the record date fixed for the same is Feb 5. Now, one of the main reasons why the EBITDA and the margins didn't contract was because of the PNG and the CNG price cuts that Mahanagar Gas did take at the start of October, which led to lower realizations. And then was the lower allocation of the administered price mechanism gas, which in the end leads the company to go to the open market, leading to higher costs. And then we have United Spirits. Revenues were up 5.3%. EBITDA was up 30.8%, and margins, improved at 16.2% versus 13.38% last year. And net profit was up 63.5%. The earnings growth was majorly driven by continued premiumization and robust demand that was seen in the market. Volumes in terms of cases was down 2% on an annual basis at 16,476,000 cases. And in terms of the segment contribution, Prestige and Above segment accounted for 88.3%, and this show a 2% underlying growth, while the Popular segment accounted for 10.2%, but the underlying revenue part of growth was down on an annual basis.
It's going to be interesting to look at the other Alco-Bev companies as well, Mika, to see if this pans out across the board. That premiumization certainly working for United Spirits. Let's talk about more earnings then. We've got KEI Industries as well as Karnataka Bank and L&T Finance as well as Tanla Platforms to speak about. Harsh is joining in to give you the key highlights from those. Harsh, morning. What can you tell us?
Well, yes, good morning, Alex. Let me first start off with the financial pack. You're looking at Karnataka Bank with a decentish set of numbers in an otherwise tough margin quarter. So what we've seen is margins continue to contract. It's come in at sub 3.5% now. And your NII has gone up just about by 1%. In terms of operating profit, that's up roughly 2% year over year at around 540 crore. And you're seeing net profit therefore higher by roughly 10% thereabouts. Provisions have also inched higher on a sequential basis. We've seen that happen with most banks. And your NPA, while your ratios may be still intact, but your absolute NPA numbers have inched higher as well. So your gross NPA number has gone up by roughly 200 odd crore to 2,500 crore, and your net NPA number has also gone up by roughly 180 odd crore to the 1,060 crore number. Your NIM I did mention around 3.5%, but your advances growth at 10% and your deposit growth at 9% means that they've grown in tandem, which is one positive that I take from the result. L&T Finance, on the other hand, let's talk about net interest income. It's up 8% year over year. It's at 1,833 crore. Provisions are down 15% at 337 crore versus last quarter. You're seeing PAT, which is up 7% sequentially. Mind you, last year there was a one-off, so that's not comparable. And ROA is at 2.53%, means they've continued to expand by 11 basis points on a sequential basis. Your retailization continues. Loan book for retail grew 31%, and retail book now stands at 91% of the total loan book. Now, overall, when I'm even looking at Tanla, slightly weaker set, KEI largely in line, but otherwise, it's those are all the numbers we have.
Absolutely. Thanks so much, Harsh, for bringing us those details. Now, we have spoken about the earnings updates from Mahanagar Gas as well as Axis, but what are brokerages saying? We've got Mahima joining in to tell you just that. Morning, Mahima. What can you tell us?
Morning, Alex. So, as you rightly said, Mahanagar and Axis in focus on the back of earnings. Citi has maintained a buy rating for Mahanagar with a target price of 1480, and they've said that margins could remain supported in Q4 given the lower LNG prices and auction win in November. Jefferies has said that they again maintain buy with a target price of 1450, and they've estimated their estimates have beaten, the results have beaten their estimates, and overall volumes are in line. About Axis, Citi has said that it maintains a buy and reduces target price to 1370, and it revises earnings by 2% for FY26 estimates, and they expect the net interest margins also to moderate to 3.9%. Also, Jefferies on Axis says that it's a tad miss on the quarter, but core trends remain to hold up, and it still stays amongst their top picks. So this is the overall view of what brokerages are making out of Axis and Mahanagar Gas.
All right. Thanks so much, Mahima, for bringing us those details. That brings us to the end of this particular edition of All You Need to Know. The big question heading into trade today is, does the selling subside? You'll find answers to that and a lot more on India Market Open, so do stay tuned. And this is NDTV Profit.